Greetings, Ted Hicks, founder, CEO, Chief Investment Officer for Hicks Associates Wealth Management. Today is Friday, the 9th of June. It's currently about 10 minutes past 9 a.m. and I wanted to provide a brief update for one of the main points that we were trying to make in this month's monthly market monologue. That video was posted on Monday. I'll make sure to link it so you can watch the full video if you would like. So one of the main things we were discussing in that video is the lack of participation. So the S&P 500 and the NASDAQ have been moving higher this year, and many would argue that they have exited the quote-unquote bear market. However, the average stock has not been participating, and so the breadth is a warning sign. When we see weak breadth, in other words, the majority of the stocks are not participating in the advance, we have to invest very carefully because that advance is said to be weak. Well, in the video on Monday, we talked about how this is beginning to change. So on the screen right now is the S&P 500. And in particular, I want to zoom into right here. This is February 2nd, the prior high for the year. And what I want to show is this is the percent above the 20-day moving average. This is the 50-day moving average, and then the 200-day moving average. And you can see I've drawn this green horizontal line. Now, fast forward to the end of May, which is right here, this another green vertical line. You can see that the S&P was at this same approximate level from February 2nd, but you can also see that we have a lot fewer stocks that are participating that are above that 20-day moving average. Same thing on the 50-day moving average, same thing on the 200-day moving average. Well, what's happened since then? Well, I shot the video on Monday morning, so we had June 1 and June 2, and we had already begun to see these measures improved, and that has continued throughout the week. Obviously, trading has not started today, so it remains to be seen where we're at today. But if we just look at the massive improvement at the end of May 31st, only about 30% of the S&P 500 was above the 20-day moving average. 20 days, remember, is about 1 month. Now look at it. We're almost at 72. And again, on the 50-day moving average, which is approximately 2 months, we had, again, 29, something like that percent. Now we're back up to 55. And on the 200-day, again, a really strong improvement. But one of the things we also have been talking a lot about is why we look at the Russell 3000. The Russell 3000 is trying to capture approximately 97% of the U.S. stock market. And so let's look at this, because the S&P 500 is just the largest stocks. It's just the 500 largest stocks as determined by Standard & Poor's. So this is going to capture a much broader swath of the U.S. stock market. And again, this is marking February 2nd. And you can see on February 2nd, approximately 86.5% of the U.S. stock market was above its 20-day moving average, a very strong sign of breadth. But then what happened? It got weaker and weaker and weaker. So at the end of May, we had approximately 39% of the Russell 3000. In other words, 39% of the U.S. stock market was above the 20-day moving average. Where are we at now? A massive improvement. As of yesterday, we're up to 80% of the U.S. stock market that is above its 20-day moving average. You can see the same thing on the 50-day, really strong improvement here, and the 200-day, which is even a better sign, because remember, the 200-day moving average is the indicator that says whether or not we are in an uptrend or a downtrend. So anyway, that's all we'll do for today. I hope that helps, but it's really encouraging to see that the breadth of the stock market's advance is improving, so that more and more of the average stocks are participating, which gives strength, gives confidence to the strength of the market. In probably next week's video, we'll talk a little bit more about some of the economic data that we're seeing, and talk a little bit about the differences between economics and the stock market. So I hope you'll watch. Hopefully you will hit that subscribe button to the channel, and we thank you for watching, and we'll talk to you soon.